update for March 2nd, 2026. Why was it a wow? Because last night kind of looked like we'd be having a very painful day for the bulls. And I say, wow, when I look and I have probably my best day to the upside of the whole year. To me, that was a wow. Market shrug off Iran conflict, closed mostly higher on a reversal off of overnight and morning lows. Again, my name is Dr. Jeffrey Scott, market MRI Pro at gmail.com. Google Group's called Top Down Trader, website marketmripro.com. Disclaimer, this is for educational purposes only. Anything I talk about is taken in the spirit of education, not investment advice. Trading involves risk. You'll are solely responsible for any investment decisions you make. I do these videos to show you how I use my tools for top-down analysis. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky. Always consult with your advisors. And I have my tools in multiple platforms, but the only place I have this scanner that I'm going to use today is in my freestanding app, or for those that have the MetaStock tools or the TradingView tools and don't want to invest in the whole app, I have the scanner as a freestanding. My Google group's called Top Down Trader. It's my only mailing list I keep. Please join. It's free. You'll get discounts on my tools. You'll get invites to exclusive educational events that I don't charge for. I'll send you a video every night when I post things so you know when to go look for them. Or frankly, I'll put the link in the video in the email. Know your news and earnings. So today wasn't as much. Tomorrow with just Fed heads. The big news is probably going to be the employment the rest of the week. ADP employment on Wednesday, jobless claims on Thursday, and the monthly employment report on Friday. Could be interesting. So today, a lot of focus obviously was played upon what's going on out in Iran. Markets opened lower and turned positive midday, and then they announced they were closing the Straits of Hormuz. Like that surprised anybody, and then the market sold off and then recovered. The Dow was the only one of the majors that closed down, and everything was well off of its early day lows. You know, I made a comment on my wealth charts video last night that I did for this morning that you can't go buy the stuff before the market opens. You know, it's illiquid markets. You have to buy it with limits, and I guess you could buy, but you're not going to get it at Friday's close. You're going to probably get it at the high of the day. And for a lot of the things that people might have wanted to rush into, probably was near the high of the day. So earnings right now are down a bit, 100 on the Dow, 88 on the NASDAQ, 20 on the S&P, and $9 on the Russell. But I think if today taught us anything is it's how it ends, not how it starts. And then the other thing I wanted to look at, was there anything of note after hours? Briefing.com is a great source for this. So what does it show me? It shows me that TREE, T-R-E-E, was up 11.3, Plug 8.9, LIF 8.7, higher on earnings. MDB down 24%, SGRY down 22%, and CRDO data center story lower 7.5% on earnings. So that doesn't help the NASDAQ at all. It's a judgment call. To hold stocks over earnings dates, it's bad judgment to not know when your stock's earnings date is scheduled. For more information about anything I talk about, my tools, pricing, what current deals, just email me at marketmripro@gmail.com. And if you have the program and you have any questions or issues with the software, coding at marketmripro.com. All right, so here's where we were today. Bitcoin had a nice rally, up 5.4, opened flat, traded higher most of the day. VIX was up 1.25. It was up over 6% at one point, so that's a nice reversal. Opened close to 6%. The dollar was up, and you know, we're so low that we can probably absorb some dollar strength, but if the dollar got too strong, what does that do to equities? And then we got the Russell up 0.92 after opening 1.38 down. Q's up 0.13, opening 1.39 down. Spider is flat, up 0.05, open down over 1%. And the diamond's down 0.08 after opening up down over a percent. So pretty impressive recovery. On the 52-week or 12-month new high, new lows, new highs minus new lows, still positive on the NYSE, weakened a little bit on the NASDAQ. On the breadth, the blue would be Mondays, the white or gray would be Fridays, the blue was Mondays. You can see that in the three major indexes, we had less sectors, mixed on industry groups, positive today, and participation 55% in the S&P 1500, 51 of the NASDAQ, 55% of the NYSE. Kind of a 50-50 day, but closed to the upside, which is great. Hold on, quick message to Praveen. Okay. What else can we see here? We could see that leadership today was energy, but it opened up 3.43. And some of the things that opened up strong, like utilities, defensive play, actually finished down with a pretty significant turnaround. Actually, I hit that wrong. The big one from the open was energy, and then the other big one from the open was staples, and then healthcare utilities down just a bit from the open. But what that tells me was the defensive plays led at the open with concerns about what's going on over in the Mideast. But by the end of the day, we rotated back into growth and technology. If we look at themes, boy, uranium was strong. I watched CCJ just keep going higher all day. Gas exploration, no surprise. Aerospace and defense, no surprise. Solar, which has been struggling of late. You can see over the last 5 days, down 6%. Metals and mining, energy infrastructure, all up above 2%. And what led to the downside? Oh, forget cannabis. Southeast Asia, home construction, copper, robotics, all down 2%. Take a look at the timing model, the daily model. Nice, big, tall candlesticks closing near the highs. They're white means they were high. They were up on the day. Everything except for the diamond which was down just a bit. But we're still on the spiders, the Russell, and the diamonds in a sell signal. We're maintaining the buy signal on the Qs. If we look at the weekly, it's the opposite. The Qs remain in a weekly sell. The rest are in weekly buys. So I think we're still in a very choppy market. You have to be careful here. And I think having cash is king. Did I do some positions today? Absolutely. I did positions today with the market moving a bit, but I still have a bunch of cash on the side. If we look at the market index ETFs, as individual traders, we have advantages over the big guys, and that's we can be nimble. And if we're wrong, we just can't let our spouses know, and we'll be fine over time. Speaking of over time, we're still in a period where, at least on the 5-year and the 10-year seasonality, it says we still got some more weakness going into later in the month. But on the all-time, and then after we get into the middle of March, end of March, we've got some seasonal strength. So that's kind of optimistic. So the spider actually opened below the 100, which had held, but we closed right up here. In fact, if we look at it, we are just below the 17 and the 50 and the 21-day EMA. A break above here would be very bullish. On the other hand, we're just range bound. And that's all I can say about that. If I look at the Qs, down below the 100, didn't really do much to change things today. Had a bullish engulfing pattern, even though it was only up a bit. And the same story, a little bit of weak seasonality, and then we get stronger. Not a big change on the Qs today, despite the massive movement from the open to the close. We look at the diamonds. If this was a line chart, don't look like it did anything at all today. Just down a very teeny weeny amount. You could see some negative seasonality coming in still, but we don't use those charts. We use like candlesticks. And we are below the major moving averages. We're above the 100, less than the 50. Hard to be more excited than neutral. And then if I look at the Russell, this is probably the strongest one. I mean, the Russell, here's its all-time high not that long ago. Here's a trend line. And can we break above that trend line? We're not very far. We're above the 17 simple, the 21 EMA. I think the Russell looks the strongest that we have right here. All right, what else can we look at here? I bet we got some volatility. Yep, strong volatility day today. And we came back down. But look where we're resting at. We're still much higher than neutral. Neutral is down here. We haven't been neutral since we started the run up. And oh yeah, we're still going up this uptrending line. So I'm okay with that. But it's got some danger to it. The fact that we came down is good. I'm looking for a big reversal, but I'd like to see it come all the way down. And we know the dollar was stronger today, and you could see that a big move really taking out the 200 and the 100-day moving average. Now, super strong dollar, not great for the market. We got a long ways to go before we're super strong. So yes, it's something to watch, maybe even something to be concerned about as a risk to your equities over time. But all things aside, let's break above the trend line and let's see how far we can move. If I look at commodities, risk on, you would have expected the commodities, gold and silver, to open up higher, and let's see what we got. So you can see gold opened up on a big gap, traded lower, and actually recovered and closed right where it opened. So up 1.29, but definitely a doji day. Silver, similar, did not trade higher today. It was down 4%, but it opened here, traded lower, closed right where it opened. Oil, the true star, but trust me, funny words. The minute they de-escalate in Iran and the Straits of Hormuz are open, this thing going right back down. So be careful with oil and energy related plays. And it could be that most of the money's already been made, but we'll see. Depends how long this goes on for. 10-year and 30-year, natural gas bounced. Boy, the liquid natural gas from England up at 1.50% today, giving a little bit of movement here in the U.S. Long way to get it to them. And you can see the 10-year popped and was up 2.27, and the 30-year also popped and was up 1.47. Both of them we'll have to watch and see, just like the dollar, how far up they go, but they're both, all of them are significantly off of their recent highs. All right, let's take a look at my bucket report. 10% below on the NYSE, that's the biggest. There's no signal here. In fact, you've got more gray over the white, which says you had higher amounts on Friday to the downside. So improvement. Market breadth, tale of two markets. NYSE was down a bit, 0.35%, but it closed, nice bottoming tail and just consolidating up here after a big run, just off the highs, and you could see the up-down volume, stocks above the moving averages is high, but it's not at the highest level. You could see up-down volume, new high, new lows, AD lines, up-down volume, all green, and we're down to 0.58, which is no signal on the 13-week new high, new low. If we look at the NASDAQ, a very different story. Did finish much higher. This makes it look a little bit better. Not far off the all-time highs, but still has some work to do. The stocks above the moving averages are lower in the range, but not the lowest. We had a negative on the new high, new lows. The rest were positive, and it's at a 0.33, which just shows you some weakness, but nowhere close to a reversal area. Ratio charts. Materials looks great. Communication shows some strength. Energy remains super strong as a staples. Industrials, real estate, utilities, even healthcare. What's bad? Discretionary, technology, financials are leading to the downside. And what would you want any rally that's sustainable to be led by? Oh, financials and technology. So the fact that they're lagging is bothersome. If we look at the 13-week new high, new low, let's just see at the different. Spider's at 0.76. We're at 0.61 on the S&P 1500. Here's that 0.33 on the NASDAQ and 0.44. Why do I look at that? Because when we get to periods of much lower numbers like in here, 0.11, it led to a big reversal in a couple of bars in the market. So when it's high and when it's low, I pay attention. If we look at the sector charts, so the prior sector comments were made using ratio charts. Let's go through very quickly. And yes, I know Bitcoin's not a sector. It might as well be one because the importance had a positive session. Still got to get above the moving averages. Obviously, a significant sell-off. Technology pulled back to the 200 and bounced, but still in a downtrend. Discretionary broke through the 200. That's weak. Communication, sort of an opposite reversal to Friday, weakened some. Here's leadership number one. Look at industrials. Big run up, sideways move, and breaking out and going higher. Super strong. And then you have something like financials, weak, well below the 200, with death crosses. Here is energy. You can see the midday reversal with the markets getting stronger, but still a big up move on the session. Materials going sideways into the moving averages. Often you see something like this, a pull back to moving average and a breakout. Moving averages and pull a breakout. So we'll be watching that to go higher. Real estate going sideways right now. And utilities look like industrials going not straight up, but certainly in a big run here. And you've got a bunch of them that produce energy as part of data center stories. So a lot of electricity generation. So you see things going higher there. And then staples kind of had a nice run going sideways here, still strong. Healthcare kind of looks like it's setting up a pattern here. We'll see what happens. And then we're back to Bitcoin. And then of course I like to look at some of the major stocks because many of these are in my long-term holdings, some are in my short-term holdings. Let's open this one up. Again, quickly go through. Amazon, all things considered, it finished out less than 1% today after opening lower. I have a position. I'm not adding to it right now. I want to see what it does. Apple, I think it still looks interesting here. Had a couple little pullback, but nice reversal again today, higher. Google, like to see it move up a little bit more. Still a lot of red bars there. Meta, I'll believe it when it gets above the 200. Netflix, there you go. Netflix really popped. We talked about even last week that if something happened with the Warner Brothers and it went to Paramount, that Netflix would pop. I don't think Netflix is done popping. We have to see what it does when it gets to 200. And Tesla traded down to the 200 and it served as support, had a nice bounce. Kind of bottom fishing by here. I'd like to see it move up a little bit. NVIDIA, right now, still staying within that trading range that we talked about over the weekend. And Microsoft, trying, kind of looks like Bitcoin, doesn't it? Here is IBB, one of the biotech ETFs. Had a negative day today, but really didn't break down. Down 0.83. I think you'll see LABU, which has a different makeup, was a little bit worse looking, you could see, but look what it did. Came back, finished minus 1.85. It's leveraged and had the same as the IBB. Pharma has pulled back into the moving averages. Inside bar today probably doesn't mean much. And data centers closed above, still in a buy. A breakdown here might be bothersome. And then defense, we talked about it over the weekend that this would pop, and it certainly did today. Something like this, you could have bought at the open, traded down some, but you would have made money on it. I just find it hard buying into these things after they've moved, and therefore you had to have been positioned in them already. All right, so let's look at the time. I talk a lot. We're at 20 minutes. We've looked at a lot already. Let's go into the JAS layout. In this layout, here's AVI, one of the ones I like today. It actually gapped up and closed higher. I like to go into the top down, see what sectors were leading. Now, I've got 3,586 stocks here. This is not the S&P 500, so the sectors are going to look different as far as leadership. So energy, tech, and financials. And in fact, if you look at the spider, okay, going sideways, and you compare that to the RSP, just off all-time highs, very different, suggesting that the broader market's outperforming. So I take those three, then these are all the industry groups in those three. Let's rank them by percent as well. Take the top 10. One. Gives us 248 to look at. Let's put on a $5 filter and a 500,000 shares. Drops us to 174. Let's rank them by up impulses. Let's just go down and see if anything looks good. HPK. All right. Sort of a bottom fishing. Hyde Park Energy. Is this an oil producer? Oil and natural gas independent. Does it make money? Eh. FLNG, Flex LNG. I mentioned what the prices were in England. I just don't know. It's not extended where I can't buy it, but how much of the ultimate move is done? Let's look at the weekly. Well, from the weekly, it looks like it might want to go higher. So this might be one to look at. But keep in mind that it has had its big move already. And at some point, you got to wonder if this thing doesn't flag before it goes higher. VG, Venture Global, another smaller oil exploration. VET, big gap up today. Uranium, this is UUUU. This one looks interesting here. If you don't have a position in uranium, that might be something interesting to look at. Taiwan Semiconductor, or is this Tower? Tower Semiconductor. Gotta love the pattern. Straight up, sideways move. Unless this thing has earnings tomorrow, this looks very interesting. Earnings are out. All right, well, this one looks pretty good. You can check the news if you want. That's the 8 o'clock bell. That one looks interesting. I love buying things on momentum off of the 50. It's not extended. Relative strength is crossing. OBV I can live with. Had a CPR, had volume, breakout momentum out, and just left the squeeze. SMTC. Semtech Corporation. When I see this pattern, I worry about high jump. It's getting extended. SGHT, Sight Sciences. Is this a biotech or a device company? Let's see. Ophthalmic medical device company. It had really, excuse me, rough sell-off down to the 200. Had a big reversal today with a lot of volume. No earnings today. Earnings are too close on the 4th. I'd probably be careful of it. SBET sounds like online betting. Don't know much about it, kind of in a low level. And one we did talk about this weekend was RTX. And This one had a big breakout today. This was one on my buy watch list. I don't know if it got filled. I'll have to go look. RCUS is a biotech with a lot of deals with Gilead. Almost the same looking chart as RTX. How bizarre. A little bit different. So this is one that looks interesting here. RCAT is a company that's had some, let's just say, concerns on the regulatory and legal perspective. I don't know enough about them to say anything about it, but I stayed away from it when I did my research. But from a chart wise, I don't like that reversal. So one thing to do is to go through this list one at a time, and I do that, but not when I'm talking to you. The my uranium stock, and I think this is the best of the bunch, give a breakout here today as well. CCJ had a big move. So that's one way I'll look at it. Another thing that I'll do is sometimes I'll just say, show me in the entire market, okay, just the top 10 industry groups. And we'll probably see a little bit different here. Do the same thing. Well, put my filters are on, rank them by up, down. And here's UUU, Valero. God, after Katrina, I owned this stock, and sometimes you just get lucky. But again, I owned it going into it. VIAV, semiconductor story. What a big move today. Getting to the point we have to worry about extended. What really drove my portfolio today, and we've talked about it before, was it AI? Oh, what was it? What is it? I almost looked at my TD Ameritrade or Schwab account 1,000 times today because I don't know when to pull the trigger. And that is, oh, Jeffrey, AXTI. It was something like that. I think we talked about it over the weekend. Try that again. Well, by the way, this is a beta version. So if it doesn't let me do something, that's why I'm using the beta version. All right, well, we'll have to sort that out and figure out why it's not letting me do that. So just multiple different ways that you can rank stocks and look at things and look at what's working. Um, that AITV was up a lot today. Um, we'll find it somewhere. All right, so let's just go back to, let's kill that. Let's go back into the impulse view. 2147 after the filters. Now we're back to 3586. And AXTI, I'll just see what happens when I click on it here. I get the new versions. I try and break them. And during my use of it, I send messages back to Praveen, and he fixes the problem. Well, for whatever reason, we don't want to show you a. That is weird. It's almost as if that's not. There it is. Sometimes you just get lucky. No, I don't think I was lucky. I bought it for a reason. I bought it because had. I bought it in here with the three dots. And it ran up to here. Coulda, shoulda, woulda. Ran back up here. Sold off. Broke through that double top. Then sold off. And now it looks like a runaway train, which means it's probably going to get done soon, and it's definitely overbought. But here's all the stocks. Let's just go into my A pluses, see if anything looks good. Arbor Realty, the stock. I looked at the earnings. I can't really figure out their earnings. Um, and what my concern was, and I have to do more research. The earnings are not positive. They're getting lower and lower. I can live with that because they're paying dividends. They had huge earnings in February, or huge revenue rather, and then a big drop in revenue for May. So I'd have to understand that more. Um, but if you like buying things off the bottom that have a big dividend, 17% dividend, you've had a couple of big days. A run up to 10 is $1.30 on an 870 stock, 15, 16%. BATL, small oil gas exploration company. Yeah, Praveen sent me a note that this is slow because it's sitting on a, my own baby server to keep it separate from the rest of everything else. Um, GD, Guidant, one we talked about over the weekend.